Global markets were thrown into turmoil in early April 2025 as the Trump administration reignited trade tensions with a series of aggressive tariff threats and pronouncements. The initial shockwave came on April 7, when President Trump, in a move that caught many off guard, threatened to impose steep tariffs on Chinese goods if Beijing didn't roll back its recent tariff increase of 34%. The financial world reacted swiftly and predictably with alarm. Stock markets, already jittery amidst growing economic uncertainty, tumbled as investors grappled with the specter of a full-blown trade war between the world's two largest economies. The Dow Jones Industrial Average, a key barometer of U.S. corporate sentiment, plunged by nearly 1%, while the broader S&P 500 index also registered significant losses. The initial wave of selling was fueled by fears that the tariffs, if enacted, would disrupt global supply chains, raise prices for consumers, and undermine business investment. The specter of 2018 and 2019, when Trump's trade wars with China and other trading partners roiled markets and dampened global growth, loomed large. The situation escalated rapidly. The following day, April 8, Trump announced a 90-day pause on what he termed reciprocal tariffs, a move that provided a temporary reprieve for jittery markets. The S&P 500 surged by an astounding 9.5%, while the Dow Jones also posted solid gains. The bond market, however, reacted with a sell-off, pushing the yield on the benchmark 10-year Treasury note to a multi-year high of 4.4%. The market's euphoric response to the tariff pause underscored the high degree of anxiety that had gripped investors. The brief respite from trade tensions, however, did little to address the underlying economic concerns that had been exacerbated by Trump's unpredictable actions. Indeed, the details of the tariff pause, once they emerged, painted a more complex and concerning picture. While the administration lowered general tariffs to 10% for most countries, tariffs on Chinese goods were not only maintained but actually increased to a staggering 125%. This selective protectionism, while politically popular with some segments of Trump's base, did little to assuage the concerns of economists and business leaders. The new tariff regime, with its mix of concessions and escalations, created a patchwork of winners and losers across the global economy. American importers, particularly those reliant on Chinese goods, faced the prospect of significantly higher costs, which they would either have to absorb or pass on to consumers in the form of higher prices. Certain sectors of the U.S. economy, however, stood to benefit from the tariffs. Domestic steel producers, for example, long battered by competition from low-cost Chinese imports, welcomed the protection afforded by the tariffs. Farmers, on the other hand, faced the prospect of retaliatory tariffs from China, a key market for American agricultural products. The Trump administration argued that the tariffs were necessary to protect American jobs and reduce the trade deficit with China. Critics, however, countered that the tariffs would harm American consumers, disrupt global supply chains, and do little to address the underlying economic imbalances between the two countries. The international community reacted to Trump's tariff moves with a mixture of condemnation and resignation. China, predictably, denounced the tariffs as economic blackmail and vowed to retaliate with tariffs of its own on American goods. The European Union, already embroiled in its own trade disputes with the United States, announced plans to impose counter-tariffs on a range of American products. Japan, a key U.S. ally in the Asia-Pacific region, expressed concern that the tariffs would discourage investment and undermine global economic growth. Emerging markets already grappling with the economic fallout from the COVID-19 pandemic feared that a trade war between the U.S. and China would further destabilize the global economy. The tariffs threatened to unravel the already fragile system of global trade, undermining decades of progress toward freer markets and greater economic integration. The World Trade Organization, the international body tasked with regulating global trade, warned that the tariffs could lead to a downward spiral in global trade, with dire consequences for economic growth and employment. Section 5, The Home Front, A House Divided. The tariff battle also exposed deep divisions within the United States. While some Republican lawmakers applauded Trump's tough stance on trade, others expressed concern about the potential economic fallout. Business leaders, particularly those in industries heavily reliant on global supply chains, were sharply critical of the tariffs. warning that they would harm American businesses and consumers. Prominent CEOs, including Elon Musk of Tesla and Bill Ackman of Pershing Square Capital Management, publicly criticized Trump's tariff strategy, arguing that it was counterproductive and would ultimately harm the American economy. The U.S. Chamber of Commerce, a powerful business lobbying group, warned that the tariffs would amount to a tax increase on American consumers and businesses. The tariffs also fueled a broader debate about the costs and benefits of globalization. Supporters of free trade argued that open markets had lifted millions out of poverty around the world and benefited American consumers through lower prices and greater choice. Opponents, however, countered that globalization had led to job losses in the United States and contributed to rising income inequality. Section 6. Navigating the Market Minefield. The renewed trade tensions created a challenging environment for investors. The stock market, after its initial plunge and subsequent rebound, remained volatile, as investors grappled with the uncertainty surrounding the trade war and its potential impact on corporate earnings. The bond market, traditionally seen as a safe haven during times of economic turmoil, also offered little solace. The yield on the 10-year Treasury note, a key benchmark for interest rates, remained elevated, reflecting concerns about rising inflation and the potential for the trade war to slow economic growth. Investors seeking to navigate the market turbulence were advised to maintain a diversified portfolio with a mix of stocks, bonds, and other assets. Defensive sectors such as consumer staples and healthcare were seen as potentially less vulnerable to the trade war's impact than cyclical sectors such as technology and industrials. Section 7. The Looming Shadow of Recession. The trade war with China cast a long shadow over the U.S. economy, raising concerns about the potential for a recession. Economists warned that the tariffs, by raising prices for businesses and consumers, could dampen consumer spending and business investment, two key drivers of economic growth. The Federal Reserve, the central bank of the United States, acknowledged the growing risks to the economic outlook, noting that the trade war was a significant headwind to growth. The Fed, which had been gradually raising interest rates to keep inflation in check, signaled that it might be forced to reverse course and cut rates if the economic outlook deteriorated further. The International Monetary Fund, IMF, a global organization that promotes economic cooperation, also sounded the alarm, warning that the trade war was a threat to the global economy and urging countries to resolve their differences through dialogue and cooperation. Section 8. A World on Edge. The trade war between the United States and China came at a time of heightened geopolitical tensions and economic uncertainty. The world was still grappling with the ongoing COVID-19 pandemic, which had exposed the fragility of global supply chains and exacerbated existing inequalities. The war in Ukraine, which had begun in 2022, continued to rage, fueling a global energy crisis and raising the specter of a wider conflict. Climate change, meanwhile, posed an existential threat to the planet, with increasingly frequent and severe weather events causing widespread damage and displacement. Against this backdrop of uncertainty and turmoil, the trade war between the world's two largest economies represented a dangerous escalation, threatening to further destabilize the global order and undermine the prospects for peace and prosperity. Section 9. The Road Ahead. As the trade war between the United States and China dragged on, the outlook for the global economy remained uncertain. Much would depend on the willingness of the two countries to find a negotiated solution to their differences. A prolonged trade war, however, would likely have far-reaching consequences, disrupting global trade, slowing economic growth, and fueling inflation. The tariffs, if they remained in place, would act as a drag on the global economy, undermining business confidence and discouraging investment. The world watched anxiously, hoping for a resolution to the trade dispute that would avert further economic damage and allow for a more stable and prosperous future. The stakes were high not only for the United States and China, but for the entire global community.